I think that if we just look at it on an annual return basis, 8 to 10% annually adding to the price of silver, I think that's the ballpark range that we are in. Effectively, anything that is electrical, any kind of an electronic system, will have silver in it. While 200,000 divided by 50, that is ultimately where silver can go.
Alright, today we're going to discuss everything silver and precious metals together with Peter Bures. Nice to have you on the channel.
Hi, Steen. Very nice to be here. Thanks for having me.
Alright, and a short introduction on Peter. Peter is currently the CEO of Silver Crown Royalties, which is definitely an interesting company we'll talk about in just a bit at the end of this video. But first I would love to lean on Peter's background as an analyst in the commodity space, of course, at Orion, BMO, Canaccord, just to name a few. So Peter, perhaps you can quickly explain what is this insane move in silver that we've seen recently, roughly 50% since February, up in price currently $32 an ounce. What are we seeing?
I think, Steve, what we're seeing is two things. Number one, there's a little bit of a supply-demand mechanic involved here. Number two, there's a little bit of a catch-up trade involved here. Keep in mind, silver is quite far away from the $50 all-time high that we saw in the mid-80s, I think, and as well as in 2011, 2012-ish timeframe. And number three is the ongoing devaluation of the US dollar, which obviously has a very buoyant effect on all commodities. In fact, anything that's priced in US dollars is going up while the US dollar continues to be devalued.
Let's start off with that supply and demand that you started hinting at. Who do you see is providing this main demand for silver?
I think that what we're seeing very recently, and I'm not talking about the last 3 months, but I'm talking about the last sort of 4 or 5 years, is really the energy transition that we've seen governments embrace, and obviously consumers to an extent as well tune themselves to. Effectively, anything that is electrical, any kind of an electronic system, will have silver in it. In fact, 33% of silver consumption or silver use goes into electronics and electronic systems, so circuit boards, switches, things of that nature. Another component that we've seen quite recently, and especially accelerate in places like China, but also in Africa, is the electrification of various economies, specifically through solar panels. So solar panel demand for silver is roughly 12% annually. And that is, basically the other driving force. I don't think that there's a week, definitely not a month that goes by that I don't hear about another 100, 120 megawatt facility that's being built in West Africa or in China or, any other place. And you can look across the United States as well, especially places like Florida, which are known. I mean, Florida is the Sunshine State. Disney is entirely dependent on solar panels in the shape of the Mickey Mouse logo, which is kind of fun. But bottom line is that's where we're seeing a lot of demand come from. On the flip side, the supply side, we actually see silver production decline. And this isn't because silver prices are low. This is because the peripheral metals where silver comes out with, such as lead and zinc, have not participated in the most recent bull run as copper has, as gold has. And quite a number of ounces that come out of the ground, silver, come out with zinc and lead. And as the profitability of those mines goes down, well, you're just going to run them out and you're not going to expand them. You're not going to bolt on any more production. So Peru, for instance, is seeing multi-year lows in terms of silver output, and this is one of the biggest silver producing countries out there. I wouldn't be surprised if the statistics are similar for other places, that they actually see silver production go down, not because of silver price, but because of lead and zinc prices, which again are lagging quite severely.
Very clear on that supply side, with silver of course being a byproduct for a lot of mines, and there you see lead and zinc not doing so well on the price side. And you've of course explained why we have seen an upswing in silver on that 5-year time frame, like you explained, with significant demand from industrial use cases, solar panels you've highlighted as well. But Peter, specifically since January or February this year, we've seen roughly a 50% increase. Is that also because of industrial use cases?
No, I think that this is partially the catch-up trade. Around that time frame, we saw gold really break new highs. I think the previous highs were just over 2060, 2070 range that we saw right around COVID. And that gold breakout then, in a way, elicited a catch-up trade in silver, which I think that's what we've seen since March of this year. And again, we can argue silver has a long way to run. We've seen all-time highs in copper in terms of US dollars. We've seen all-time highs in gold. We haven't seen all-time highs in silver. You'd have to get to $50 on an unadjusted basis to get to all-time highs. So I think that there's quite a bit of investors that may feel like they missed the gold breakout by piling into silver for that catch-up to close that gap between 30 and 50. And that's what I think happened starting in March, was you had the trade, you had gold go up, gold break new all-time highs, and some of that money get recycled into silver, which is sometimes referred to as poor man's gold.
Yeah, that catch-up trade really reflected well by this gold-silver ratio, I suppose. And for the viewers at home, that is a ratio between how expensive is gold compared to silver, same quantity in an ounce. And currently we see that gold-silver ratio roughly being 75. So gold is 75 times more expensive than silver. And like Peter described here on this chart, we see we came from roughly the 90s and we're now currently trading at that 75 ratio. So what Peter is saying makes complete sense. What can we expect from here, Peter? Will this continue to go down? What should we expect as potential investors, speculators, or a trader?
Now we get into the belief system part or into technical analysis. You can talk to a number of chartists that think that there's quite a bit of upside still here for silver. Are we going to retest all-time highs? Probably. And that's quite realistic. If you look at the gold-silver ratio, the bottom end here is sort of in the 50s range. So if you take gold silver to 50 times, you would be looking at 40 plus, almost $50, $45, $50 silver as well. And as we've seen on a number of occasions previously, silver does tend to overshoot a lot more than other metals in terms of making new all-time highs, and substantially so. Again, we can look at the instance in, I believe it was 2011 when silver hit $50 the last time. It went from basically 20 plus range to 50 and then immediately retested the $30 range and came right back down. So these sort of volatile swings are entirely possible. Could we see something that breaks that $50 ceiling that's been in place for the last 50 years? Could happen. If it does, could you see $100 silver in short order? Absolutely, you could. That volatility certainly is there. And in the gold-silver ratio here on the chart that you have, you can certainly see that these moves do tend to be quite violent. So is that possible? Absolutely it is. Do I think that happens anytime soon? I think that you would need to see some kind of a severe shock to the system, be it geopolitical, be it in some massive fashion, supply-demand, a big supplier, for instance, coming offline, embargoes, things of this nature might have an impact. But I think certainly geopolitical would result in the biggest price move.
I guess another factor that we haven't really highlighted just yet is Shanghai, where we have seen quite a lot of demand. This is a chart from an individual whose name I will not even try to pronounce because I'll butcher it so much, but I really appreciate Oriental Ghost's insights on silver. And he displays the silver and gold prices at the Shanghai Gold Exchange, where we see a significant discrepancy between the price that's trading there versus the COMEX, the commodity exchange in the United States, or the London Metal Exchange. And here we see displayed a price of roughly $35 for silver. And also their silver faults on the Shanghai Metals Exchange has dropped to a new low since 2020. Peter, what do you think is driving this enormous demand in China? And should we expect this to continue heading into the future?
Yeah, no, it's an interesting question. I've looked at the quote-unquote discrepancy or the physical premium in Shanghai relative to spot markets in North America. Obviously, the data set only goes as far back as the Shanghai Exchange has been publicly open. So we're looking at less than 2 decades. And the premium certainly is there and always has been there. And that makes sense to me because, if you're getting physical delivery, there's insurance, there's actual transport fees, et cetera, et cetera. So there would be a premium for that. In the data sets that I have, it is impossible to determine, at least for my limited ability, any sort of an indication of the size of the premium and where the price is headed. In other words, you can have premium of 15, 20%. Does that indicate that the paper price in North America will go up or down? Again, I really can't quite determine based on historic relationships. Nonetheless, what we are seeing, and this goes beyond reproach because we do have now data coming out of the Chinese central bank as well as other countries. They're quite open, and China has been very clandestine through the early 2000s anyway in reporting their gold holdings. We do see a transference of physical from the Western world to Asia. And this has been going on now for quite some time and is only seems to be accelerating, especially in the last 3-4 years. So coincident with the onset of COVID, but certainly since 2019, 2020, we've seen a lot more physical influx into Asia than we have before.
Very interesting. And of course, in the COMEX and the London Metal Exchange, there's high volumes in silver and gold. But a lot of that is, like you described, paper trades, people that are closing their positions and not taking physical delivery. And oftentimes those trades are in significantly larger quantities than the capability to deliver physically. So do you think that this increased physical delivery that we're seeing in the eastern part of this world, in Asia, will have an effect long term, pushing up the price of silver and potentially also gold? Or should we not really bet on that per se, but more on the underlying mechanics of the dollar devaluing compared to those precious metals?
I think that these are both things that are happening in parallel, Steen. I think that you're spot on in that this is something that's worth tracking. Because essentially, if you do take physical delivery and you do not put that metal back in the market, you're affecting a short squeeze in the physical market, not dissimilar from what the Hunt brothers tried to do a couple of decades ago. And that was the first time silver hit 50. So that is, I believe, certainly happening. And, dollar devaluation will only continue to fuel that sort of thing. Now, you also have physical demand in the United States in places like Costco and Walmart, where you can buy physical gold and physical silver. And on the one hand, you have that. On the other hand, you have pawn shops that are seeing an influx of physical gold and physical silver being exchanged back into paper money. So there is that supply side of it. There used to be an old saying that says the marginal cost of production of gold or silver is the cost of a postage stamp. There's so much of it above ground that you can liquidate and you can sell in this fashion. But if I go to Walmart and I buy a gold ounce or a silver ounce, my intent is not to put it back in the market next week. This is something that I'm going to hang on to for quite some time. And the more of that we see, the less obviously there is on the supply side of any sort until a significantly higher price occurs. So yeah, these are two very good points in terms of what's fueling the physical premium and the physical demand, as well as ultimately the price of silver.
Of course, you are running a company that's specifically focused on silver royalties. Again, we will talk about Silver Crown royalties in just a bit, don't you worry. But perhaps you can quickly explain, what is your long-term confidence behind silver? Is it mostly that you predict that the gold to silver ratio will change? Are you effectively going short fiat currencies? What is your fundamental driver behind looking for these precious metals?
In terms of silver specifically, there are two things that attracted us to the space. First and foremost, it's the fiat currency devaluation that you spoke of. It's a natural hedge against government printing paper. And it doesn't matter which currency you talk about. Could be the euro, could be the people's currency in China, could be the Peruvian sol. It doesn't matter. Governments, all that's basically what the currency is to them. It's something to print to fund their deficits. So you're essentially guaranteed that if you hang on to paper money, the purchasing power of it will erode over time. Holding precious metals or commodities of any sort should offset that. They act as a natural hedge. So that was the attraction to us. The second part about silver wasn't so much about the fact that it's in a perpetual deficit and really has been for the last 20 plus years. And the fact that above ground stocks are nowhere near what gold above ground stocks are. Again, silver does have many more industrial uses, especially at the price point that it's at in electronics, as we talked about, and other things. But the key here is that once you take an ounce of silver out of the ground, you're probably not going to put it in a vault. You're going to use it, and it's off the market. It's not coming back anytime soon. So not dissimilar from oil, but obviously oil, once you burn it, it never comes back. But silver, through electronic recycling, whatever, eventually will enter the market. But that's all part of the balance. But that was not why we were attracted to it. It wasn't because of the electronic or electrical energy transition revolution. It wasn't because of that. It was because we've looked at silver as a relative performer to gold and other commodities through time. And again, it essentially maintains its purchasing power, albeit in a more volatile fashion. But nonetheless, it does maintain its purchasing power over time, plus minus a couple basis points. So if we look at the devaluation of the US dollar, for instance, since the NASDAQ bubble popped in the early 2000s, in terms of copper, the US dollar has been devalued 87%. In terms of gold, 90%. And in terms of silver, 89%. So it really is ultimately that hedge against currency devaluation that drove us to silver. The other, third component of why we really like silver is because it is a space that's generally overlooked by others. Silver comes up with copper, it comes up with gold, it comes up with every other commodity that's non-ferrous. And nobody is really attracted to that space. People, investors like the bigger ticket items that you can only find in gold and copper, but the smaller deals, the smaller transactions generally ignored are in the silver space. And that's what attracted us to it, is because these deals are available and there's a lot of them out there and you can make good returns on them. It's not a overpopulated market like the rest of the royalty space.
It's great to pick your brain about the silver price, Peter. And you're actually acting in accordance with the fundamentals of silver, like you described before, and that you do that through Silver Crown Royalties. Could you please give us a 30,000 feet overview of what that company actually does?
So Silver Crown Royalties is a royalty company, as the name implies, focused on silver, again, as the name implies. So what we do is we focus on silver byproduct credits from a mining operation. So for instance, a gold mine will also produce silver, but a very minute amount of it. We're talking 1-2% of revenues at a gold mine will be silver. We approach the mining operation or the producer and we say, would you like to crystallize value for that silver today? We give you equity in Silver Crown Royalties, or we give you cash so that you can buy extra trucks or you can do an expansion or whatever you need. And that's how we secure ownership of that silver. We generally pay $1 per ounce in the ground up to $10 per ounce produced. And then we get paid in silver equivalent ounces as that mine produces. And then we ultimately aim to pay those revenues as free cash flow out to our shareholders.
And perhaps we can talk about the type of royalties that you actually do. Like you already described, there are multiple types of royalties. You're selecting these byproduct credits. I was struggling with that word, my apologies. Perhaps you can quickly explain what the pros and cons of that are. Of course, silver focus makes complete sense, but also what happens when that silver is out of the ground and more silver is found. Is that also rightfully yours?
In terms of the way that we structure the royalties, the answer is yes. So what we do is we end up being on title on the project that the company owns. So we become essentially part owners of the mineralized material that's in the ground. If they find more that's on the licenses where we have the royalty, we maintain our percentage ownership of that silver on that license. As they produce more, that also comes to us. In terms of how we structure the royalties themselves, Steen, great question. We do it a little bit differently than other guys in terms of, for instance, in the first transaction that we've done, we will pay for additional silver ounces discovered that come to us. So in other words, if somebody adds 1 million ounces of silver to our account on their property, we would pay them $1 million Canadian in Silver Crown Royalties shares. This encourages them to go and explore, and it also makes their shareholders comfortable with us being there, because we didn't just take all the exploration upside from them, we're actually paying for the exploration upside as well. In a similar vein, we do have milestone incentives as well that would, for instance, see a company get additional Silver Crown Royalty equity if they increase production at a sustainable rate, or if they get permits, or if they get funded to production, or some other type milestone, or some other type accomplishment. And again, this is put in place to incentivize the producer or the operator to go from the exploration stage or development stage into production, because without production, ultimately we can't pay dividends. And if we can't pay dividends, well, there goes our business model. Again, we built this company in order to turn paper money into silver, and you can't do that without production coming back.
Turn paper money into silver, that brings us right back to that devaluation of that currency. That's why you're attracted to silver. It makes complete sense. Thank you very much for the ability to pick your brain on the macro of silver. I think we've learned a lot about the supply demand mechanics, what we should look for. You're not much of a speculator, also great, and very appreciated on your thoughts there. I would love to give you a quick opportunity to plug Silver Crown Royalties. How can people reach out if they want to partake in the story? You are currently private, but there is a private placement open, correct?
That's correct. We are doing now the final private raise before we go public. We filed our listing statement with the exchange yesterday. We do have a ticker reserved, SCRI, and as part of this, we're doing a 50-cent unit offering, up to $5 million, of which we have 2.6 million soft circled. Anybody can participate. You can reach us at silvercrownroyalties.com, or you can email us info@silvercrownroyalties.com, and we'd be happy to accommodate, answer any questions, help you in any which way we can.
And a quick disclaimer here, both Stijn and me are invested in Silver Crown already, so please take our opinions with a grain of salt.
And then I would love to end the interview here with your long-term price prediction for silver, Peter. What can we expect? Please speculate with us.
Well, the great way to answer that question is to simply look at what I believe is the cornerstone of what money is, and that's gold. And the reason for that is because for the last 200 years, it sort of has been naturally and by government dictate. But bottom line is, 100 years ago, gold was at $20. Now it's over $2,000. And if somebody said 100 years ago, gold's going to $2,000, you would have thought them insane. Well, if the rate of currency devaluation continues at the same rate, i.e. there's no increase, which ultimately there could be, and I think there is, but even if we stay at the same rate, gold going to 200,000 in 100 years is not inconceivable. And now going back to the silver to gold ratio that we talked about, peaking out at 120, but bottoming out in the high 40s, mid 40s, let's argue it's 50 times. Well, 200,000 divided by 50, that is ultimately where silver can go in the next 100 years. Is it going to go there next week, next month? Doubtful. But I don't think it's an inconceivable concept to say, just like 100 years ago, you could have said, yeah, it's going to be 100 times where it is now. Well, if gold's at $30 right now, it could be $3,000, $4,000 in 100 years. That's a long-term view. Stijn, I'm going to add one more thing. I think that if we just look at it on an annual return basis, 8 to 10% annually adding to the price of silver, I think that's the ballpark range that we are in. So sure, there's fits and starts. Sometimes it goes a lot quicker, sometimes a lot slower. But over the next 10 years, I think we'll add a 10% clip. The next 10 years, 10% clip, etc. So that's how I think that's where silver prices are going, higher.
Thanks for that long-term view. I really appreciate that as well. We tend to get so caught up on these short-term moves. Volatility, of course, very exciting if you're a trader. But if you're working on your long-term wealth, focusing on that long-term view is the most important. And then that short-term volatility doesn't matter. And like you described, we can expect 8 to 10% returns just from the M2 money supply increasing thanks to inflation. So definitely makes complete sense. Peter, thank you so much for your time. Really appreciate it. We'll put the details to Silver Crown in the description. And thank you for joining us today.
Thank you very much, gentlemen. Thanks for the opportunity.